The projected growth is expected to be fueled by recovery of tourism sector, strong private sector investment, completion of key public projects in road, rail, and energy generation. Nevertheless, members of other states, ICPAK is of the considered opinion that more mitigation measures should be put in place to deal with both external and internal economic shocks. Most notably, effects of Brexit at global level and protectionist policies by the advanced economies are yet to be felt here in Kenya. ICPAK commends the government for the improved business environment, the increase in foreign direct investment from $0.514 billion in 2013 to $2.3 billion in 2016 is a testament of the greater efforts put by the government, private sector, and all stakeholders. We need to maintain this trend. However, I want to challenge the government because you know when you increase the tax bands and you're basically saying that you are moving the low-income Kenyan from 11,000 to about 13,000. So basically what you are saying is you are leaving another 2,000 shillings not being taxed. And maybe the question you need to ask yourself is, what is the impact of that? The lowest tax band is at 10%. So when you move the taxable amount from 11,000 to 13,000, the saving to the Kenyan is 200 shillings per month, because you're basically saying the 2,000 should have been taxed at 10%, and now you're not taxing it. 10% of 2,000 is 200 shillings. So what impact does that have? Development expenditure or development budget has gone down by about 22%. If you compare last year to this year, the development budget was about 820 billion shillings. That has come down to 620 billion. And of course, we're asking ourselves key questions. Why is the government bringing down the development budget? Because we know that is key for the country. And of course, it could be guided by the fact that we seem to be having challenges with the absorption. Last year, in 2015-2016, the 2014-2015, the absorption rate was at 46%. In 2015-2016, last year, the absorption rate went up by 20%, from 46% to 66%. And I think maybe the government is just appreciating the fact that maybe the budget lines they have been giving the capital expenditure is too ambitious. Much closer to our leadership, I think we need to ask ourselves whether, as legislators, are we overpaying ourselves? Because I'm saying overpaying ourselves because they recommend the salaries and go and debate and pass in parliament. So are we overpaying ourselves? And I think this is an issue which has been discussed on and on. And we have been compared with some of the most developed economies. And I don't think as a country, we are really there. So that is an area where the leadership needs to be very keen on if we are going to manage the public wage bill. On budget implementation, members of the states, delay in release of funds by the National Treasury